Look at your market news now. Asian shares inched ahead on Wednesday while higher treasury yields lifted the dollar as markets wonder if the world's most powerful central banker would confirm or confound expectations for U.S. policy easing this month. Chinese shares fell as flat producer price inflation fueled concerns about domestic growth, and a flood of initial public offerings targeting Shanghai's new tech board diverted funds from the rest of the markets. The Japanese Nikkei lagged with a loss of 0.15%, while the Hang Seng Index added 0.3%. The Shanghai Composite Index was down 0.44% by the close. The S&P 500 ended slightly higher last night as gains in tech-related shares offset fresh worries about the impact of US-China trade dispute on earnings. The Dow Jones Industrial Average slipped 0.1% to 26,783 points. The S&P 500 was 0.1% better off at 2,979 points. And the Nasdaq Composite added 0.5% to end at 8,141 points. Right, so let's get more on market news. We cross over to my colleague Arabile Gumede standing by at the JSE. Arabile, we know that the British ambassador to Washington has just resigned. What else is happening that might be moving markets?
Yeah, certainly a whole lot that might certainly be moving markets. And of course, Nzinga, not so long from now, just over an hour's time, we will be awaiting Fed Chair Jerome Powell, as he is expected as well to speak to Congress and testify to Congress as well about the state of interest rates in the United States. What does that mean then for the interest cutting cycle, perhaps in the United States? Will they cut as aggressively? Will they not? A few hints perhaps will certainly be expected, and that's something we'll chat about in just a moment. Locally, not much by way of company news, but of course the unemployment saga continues in South Africa, and this time around ArcelorMittal South Africa, the subsidiary of ArcelorMittal, the global company and the biggest steelmaker in the world, cutting 2,000 jobs. We'll unpack exactly how difficult things have been in the steel industry in just a bit. But for now, let's unpack exactly what the markets look like. Here are the numbers on that global and local numbers. Well, as you can tell, the market picture, they're turning slightly negative across the world, while locally, however, you see the local bourse managing to pick up around 0.5%. Let's chat to Makwe Masilela now from Makwe Fund Managers as we unpack that picture a little bit more. Makwe, thank you so much for the time. Really appreciate it this afternoon. The JSE again bucking the trend of the rest of the globe as things go down, particularly in Europe, but on the local front, 0.5% better off.
Yeah, sure. And I think it's a question of we've seen some resistance. The rand is helping a little bit. 418 is holding okay. But it's a question of, at the end of the day, the market is doing absolutely nothing. All eyes are going to be on the testimony that is expected from the Fed chairperson. And we know he's testifying today and tomorrow. And also later today, we expect to see the minutes coming out of the meeting that the Fed had. So, but even though those minutes usually they tend to become a showstopper, today, unfortunately, we just have to get that testimony exactly what is it that the guys are thinking about, because remember it's just coming up a week after we've just seen the good job numbers in the US.
Now the sentiment then is, what exactly can we expect from Jerome Powell? The market will certainly want him to be a little more dovish in a sense of saying we would like to cut interest rates, and we certainly feel that despite this the need is there to cut. But he surely is going to come down a little bit softer, right? And be a little more, I suppose, hawkish in a sense.
You know, the funny thing is the markets have been going up at the back of the USA will cut interest rates. So now, after getting those good job numbers, it's a question of the speed and the scale. So meaning the markets are no longer that aggressive, because at some point they were thinking 0.5%, you know, maybe the guy will cut twice. So now if you check, the market have just factored in that, yes, even though we could see that the job numbers was okay, we still expect him to cut at least by a 0.25%. If you check the probabilities, guys are expecting that 25% chances, for them to get a 0.25%, the chances are 98 compared to the last time that they were expecting 75% chances to cut by a 0.25%. But the cut is still expected. It's a question of the speed and the scale, whether it's going to be 0.5% or a 0.25%, because inflation in the US as well is not looking okay.
What happens though if he, kind of hints that perhaps it'll be data dependent, and we'll see if we even need to cut at all? How much more shock will that send through the market?
That will be extreme shock, because remember, he did state that before, that they will act appropriately. So now if he becomes neutral or a little bit hawkish, that's not going to be nice. And I think the markets to some point are factoring that in. If you look what is happening with the US dollar, we've seen the US dollar strengthening. You look at the treasury yields are going up, hence the US dollar is strengthening, and as a result you see what is happening to the gold price, because you get a better a stronger dollar. It becomes negative for the gold price.
Yeah.
So because markets are saying, the chances are the guy might be neutral or a little bit hawkish, but the aggressiveness, I think that's the main thing, that how aggressive the guy is going to be because of the inflation in the US, which still warrants that at least there might still be a cut of a 0.25%.
Do we cut then on July 18th? Because this is bound to impact that. Or are we just going to wait for this and see, and that'll tell us what happens on July 18th, even though the Reserve Bank would like to say that they actually don't follow the Fed word for word, but you kind of get a sense that it does happen to a pattern of sorts.
When it comes to us, I think we've got all the reasons to cut on the 18th. Given all this happening with inflation, they said that is their mandate to make sure that the price stability is there. Our inflation for the past 3-4 months, it has just been under 4.5. And I think when you look at inflation expectations, that anchored well below 4.5%, which gives them all the reasons to be able to cut. And that will at least to some extent help with our economy, because today we had yesterday the deputy governor saying, when we make these decisions, we do consider growth, we do consider jobs. So we've got high unemployment, our economic growth is not okay, but the inflation, which is our main mandate, allows you to be able to cut. So I think the markets has factored in that come the 18th, we should be able to cut.
Okay, let's turn our attention to some company news, especially locally then. ArcelorMittal South Africa deciding to cut jobs, 2,000 of those. Earnings are bound to give way by around 650 million as well. It's been a dire time for steel, and you've seen construction companies even fall out of the market as well in many instances. This is a clear sign that things are tough.
They are, and if you remember 2 months back, the company itself, the holding company ArcelorMittal globally, they indicated that globally still sales are going down because they've got these two things. Unfortunately, they were affected by lower steel prices and also the consumption in Europe, and also back home here around 2 months back or so, they indicated that, as much as we did manage to make money out of selling our 50% stake in Max Steel, going forward we don't see an improvement when it comes to the steel demand, and mainly because we know that the global economy is not doing okay, our economy is not doing okay, and worst of all, back home here we've got high electricity prices, high port prices and rail prices. So as a result, it's affecting them. Look at iron ore, which is one of the inputs. Iron ore is almost at a 5-year high. We know the reasons behind what has been happening with the Brazil Veleman, that dam blasting, the weather when it comes to Australia. So yes, input costs are going up. So unfortunately, as it stands now, the guys, the ArcelorMittal South Africa, there's no way they'll be able to make profits anywhere else other than if we can see a serious improvement when it comes to the global economy. So as it stands now, it's just so unfortunate that on top of there's no demand, on top of low prices, they've got this high input prices or costs that they cannot control.
Yeah. Makwe, appreciate the time. Thank you so much. They're one of many, right? ArcelorMittal are just one of many entities that are certainly struggling when it comes to whether it be construction or steel making as well. The likes of Metals and Resources certainly coming into the spotlight. The global firm, of course, ArcelorMittal globally, has also struggled. So that continues to be the picture on hand. 14.18 against the US dollar, so perhaps a steady mark for the South African rand, while the JSE bucks the trend, sitting 0.5% higher. We'll continue to unpack that market picture for you. Nzinga joins you right after the short break. But for me, that's where the buck stops.